Hello everybody, welcome back. So last night I was doing the Patreon live stream, and I always start the live streams with, I suppose, a summary of the trading environment, so we can look at whatever it is that people want me to look at through the lens of a specific environment, because we all know that the market generally trades as one. There's going to be anomalies throughout that, which sometimes we can uncover, but for the most part everything is governed by a much deeper market move, right? And I suppose you may or may not like what I'm going to show you, and it's not the worst thing in the world, but it's not particularly good. And I was going to save it till the weekend because I'm going away at the weekend, so I was going to make these videos, which are generally, long-term time frame sort of things that aren't particularly relevant to that exact trading day. But I thought, given the scale of what it is I'm going to show you and the repercussions of what it could mean, I might as well just do it now, and I'll have to think of something else to be released over the weekend for you. So this is Dixie, right? So yeah, it's just a load of lines on the screen, but if we were to do this to it, and this is monthly, alright, so this is like 1978, so it's a big chart or a long-term time frame. What we see is a fall-in wedge, which is a bullish formation. Once it's broken out of, and we broke out of that on this first stage of this parabolic run back in the mid-teens, right? So 2014, and since then we came up to the top of a new resistance line, which is a rising channel, which is technically a bearish formation. All right, so you're more likely to break out, as in like break down from one of these, than you are to break out. However, we have already broken out of a bullish formation, so I'm going to scare you here. So just I did this on the live stream. I do not take this seriously. You might see some people do this sort of thing on Twitter. So you'd measure from the breakout, the mouth would be the measured move, and the breakout would be where you start it, and it points to a Dixie of 185. Right. Not particularly useful, but it's just something to I suppose to show people. I'm more interested in the new formation to which it's in at the moment. Measured moves from mouths, especially on something like the Dixie, it's kind of impossible. And what we're looking for on here would be, I suppose, a move up to the teens, really, the 116, 17, maybe even 120 or so before we start to break down again back in, even just if it was within the channel, and see where we go from there. This is an enormous range, right? This is an enormous range. Remember, this little portion here, it just refers to what happened recently, this little move over here. Now, Dixie can go hard, right? Can go pretty hard, right? If it wanted to. And it's not just the dollar that's gaining strength, it's all the other currencies that are getting weaker. This chart, although can be charted, and we can see that there is definite supports and resistances within these formations. And again, back last September, or a whole year ago, basically, we predicted, not even predicted, it was not a prediction at all. It was based on the chart. We said this whole year is going to be a bullish year for the dollar, and it has been bullish the entire time. But we all know that this chart and all currency charts are effectively going to be manipulated by the central banks which govern them. So we are looking at this in as far as a chart is concerned, and we would be looking for it to be rejected, not just on its trend lines, but because the Fed decide to pivot somewhere along the line, right? Somewhere down the line. So that is generally not seen to be a bullish thing for any kind of stock or anything really, especially crypto. You're not really expecting to see bullishness with an uptrend that continues on like this. But again, it is what it is. I'm not looking for a giant measured move up to brand new all-time highs, although we can't rule it out, but it seems relatively unlikely. Now, Bitcoin is doing something. I'll get rid of this. I was just talking about something else on the stream last night. So Bitcoin, this is your 4-year cycles. This is your bear market. This is your bear market. This is your bear market. And we're on a log scale. We can see a bear market, if we just zoom in a little closer, has support all the way down. We do it on candle bodies. Same on this bear market, support all the way down on candle bodies. And if we do it on this one, we still have the support all the way down on candle bodies. And we think about this in the form of time, and we've spoken about this in quite a lot of times actually, as far as time is concerned. The bear market, technically on Bitcoin's, for a Bitcoin perspective, the 4-year market cycle, as far as time is concerned, you'd be looking for the bottom to be in anywhere from September to maybe December this year. That would be it. You should not be expecting any more bear market after December, and the chances are that the low would have already been printed anywhere between, well, technically now or December. So we're looking for around that kind of period, so the fourth quarter. And so if we think about this in terms of how relevant these log scale descending trend line of support is concerned, we often end with these capitulation dumps at the end. You know, we've got a down, up, down, end accumulation. Down, up, end accumulation, up. And then what we've got here is we've got down, up. Recognize that I've started the bear market support trend line from around here, whether you base it on this, which was the money flow index top, this, which was the market cap of crypto top, or this, which was Bitcoin's price top. Each one of them are relevant, but what we do see anyway is that we got a descending trend line of support that seems to match, and so we'll be looking for this to be tagged once again. And if that's the case, it's going to bring us into the teens. And if we think about, if it was to do it this sooner rather than later, we're in September, we're down to 17,000, we're down to October, we're down to 16,000. If we could bring it all the way down to November, we're down to 14,500, basically, to the beginning of next year, which is an interesting area, because we can measure this top over here, can't we, with a fair bit of relevance over here as well, if we just zoom in a little closer. And we could imagine that actually, as far as things being relevant is concerned, we've got candle bodies here, we've got wicks over here, we've got time placing the end of the bear market potentially down at December, which is the latest I would expect it to be dumping at. It could be dumping at any point before then, but up to then, and so we would be looking for a low of, at best, and I'm talking candle body holds here, because obviously in the past we have had wicks down below these lines, but candle body holds above 14,500. Now that again is held up by this horizontal, and it's just an interesting thing to think about when we see the broader picture of this rinse and repeat Bitcoin bull market bear market cycle, right? So I'm going to put it out to you that I'm particularly sort of waiting for a new low to be formed on Bitcoin, and I'll be looking to scoop it up as we enter the teens, basically. Another thing to be concerned about is what I call the everything drop, which is the inverse of the everything bounce, which is something that we played. We talked about the everything bounce when oil and commodities reached their peak over here. We smashed the stocks and crypto ever since. It's been great. And I said, look, it was an everything bounce. Now we're looking for the everything drop, and the whole thing is basically like a rotation from oil or from stocks into energy, right? And you can see now that this is moving up as expected. We were talking about this. I'd made no secrets that I was going long on this, and I don't do derivatives much, but I was going long on oil with the aim to move it to between 100 and 104 to start with. And I think that looks to be most likely the case. We are on a weekly here. We've got a breakout of the resistance, which has so far pushed us all the way down to our first target, $85 barrel. Now I think that there's a good chance what will happen is we move up to 104, get rejected from there, and we move down to 75. But I wouldn't hold out on that. What we're seeing right now is a breakout, and then this is going to transfer onto the everything drop, which is from Nasdaq, which is why, again, when we look at Nasdaq, the royal we, I sold most of mine. I did it in 2 batches. I sold just before the FOMC meeting, and I sold as we approached this descending trend line. And now, obviously, I'm looking more and more like a genius every day. So we're still in a giant descending trend line here. We're still within a descending triangle. That's what we're in here for the Nasdaq. So that doesn't paint a pretty picture for crypto, which is pretty correlated, in all fairness, to Nasdaq. So we've got oil bounce, traditional markets back within its descending bearish formation. We've got Dixie continuing with its ascending channel, which is a bearish formation, but it's still not reached its resistance. Also a breakout from a falling wedge, a much bigger falling wedge, which has a crazy measured move of much higher than where it is right now. And the last thing I'm going to present to you is the old Bitcoin dominance chart. Now, I talk about this all the time, and every time we approach or get towards 40% dominance, it is really time for you to get out of alts. Or for me, these are my rules for my trading. Okay, my rules, my trades. Right, so I always would say get the hell out of the lower you go anyway, the less altcoins you want to have. But the lower we get and closer we get to 40% dominance, the less altcoins you honestly really do want to have. And so we've had bad reactions from here. These represent either Bitcoin running without altcoins or altcoins getting smashed, absolutely destroyed in the form of a market dump. This, just to put it into context, this area over here, 14th of May was the last time we more or less hit that. 14th of May was, where were we? 14th of May. 14th of May was where we were holding on to this support just before the last big catastrophic dump that took place from 47 all the way down with a wick down to 30, which again, was very big, very fast, and throughout that period you might have seen this would happen with Bitcoin, but altcoins were going down 70%, 80% in a 2-week period. You don't want to be around for that, trust me, you don't want to be around for that. And it's rinse and repeat. The same thing happens every time, really. Even over here, yeah, we did break down a little lower. This is where the Bitcoin dominance chart was less relevant than it ever was, really, because altcoins were in their infancy. They were in full swing now, but the dominance chart still proves to be an appropriate chart to trade. That's how we managed to get the altcoins over here. We said we'll take the risk. 100-200% later, we should really be out of them by now. For what either is going to come next, which is just either holding on to Bitcoin for what looks like it's going to be another 30% drop or so, or just into Tether, just in case. Now everybody talks about the bearish September, which to me is like superstitious nonsense, but when so many people believe in one specific outcome, it becomes a self-fulfilling prophecy, right? That's just the nature of trading anyway. That's how indicators generally work. Everybody looks at the same thing and makes the same decision at the same time. That's basically what's going on here. That's why there is cycles and all this stuff. It's all just human behavior. And so if we think about everybody going on about, September's super bearish for Bitcoin historically, and I'd be like, well, what does the chart say? And I actually would say, well, actually the chart doesn't say anything particularly good. In fact, the chart clearly is in a major downtrend, and if we look at all those other components like oil breakout, Nasdaq breakdown, correlation between the two, dominance being low, it's probably best for us to sit out for a little bit. Let's face it, like over the last 2, maybe even 3 months now, we've done some really good, successful trades. There's only been, from what I remember, there's only been the sand trade that I've done that didn't work out. Everything else has worked out multiple times. We're looking at Atom, Jasmy, EOS, obviously Bitcoin, Chainlink, everything. Matic, a massive one, 80% for that. Loads and loads and loads of trading. It's all worked out really, really well. Even my bot account has more than doubled. I started with 1,000. I'm now 2,600. So even that has worked out really well. So now it's time to take a back seat as the market may be entering its last phases of this bear market, where we will want to keep some cash available. Because if we didn't have cash available at the end of a bear market, you'll really be kicking yourself. You really would be kicking yourself. Now, I'm not suggesting that this definitely has to happen, but there's enough going on here psychologically, cyclically, and TA-wise, and fundamentally as well. We think about we're about to approach into winter. We're going to need to turn that heating on. We're going to need more fuel. We're going to need all this stuff. And there's still the war, and we've got the supply chain issues. There's all kinds of reasons beyond the charts which point all to the same situation. So maybe September is going to be a bearish one, and I'm not willing to bet that it goes either way. But what I would like to do is to retain some of the epic gains which have been made on the stock market and on crypto over the last 2 months, so I can pile them back in if we do capitulate down to 14,500 or so over the next 2 or 3 months. It could even happen tomorrow, but over the next 2 or 3 months. And if it does get down to those levels, I'm willing to literally start to buy that dip for Bitcoin and some of these other altcoins that I really want, and I'm just going to look at those as in investment purposes. I'm going to stick them into staking. I'm going to stake them across a few different platforms and leave them for the long term, you know, leave them for a 2 to a 3, maybe even more period, just to stake and stake and stake and wait for them to reach full maturity. So I'm just going to leave it with you there. There's nothing much more to say. I've shown you the charts. You know, I've talked about the cyclical nature of human behaviour when it comes to September. It's not worth taking the risk. Let's conserve some gains. Sit back. Take your annual leave if you're a trader like me. So what I was saying yesterday, I said, yeah, look, I mean, obviously as a trader at home, I can just sit and press buttons whenever I want. But sometimes, you know, it's nice to not trade for a little bit. I'm still going to monitor the market carefully because I want to make sure that I can take advantage of some seriously low prices if and when they come. I'm pretty sure that they will come. But there's no need for me to go crazy. We've done enough trading these last 2 months to see us through the rest of the year, really, as far as profits are concerned, and let's keep them as profits. All right, let's keep them as profits. This is still a bear market. We're approaching the end. Historically, the end is often one of the nastiest parts. Let's just play it safe. Anyway, I'm going to leave it with you there. Hopefully that makes sense to you. Join the Patreon, join the Telegram, join the Discord. There's going to be value in focusing on charts over this period, but not necessarily trading those charts, because good times will lay ahead. Seriously, good times. The good times for this summer have been decent, but I'm pretty sure they're over. Anyway, thanks for watching, guys. Hope you have a nice day. Take it easy.